I think the energy crisis is already engraved in stone and is going to happen no matter what, simply because the policies of the Europeans and the Democrats in the United States have already kind of put us on that track for energy crisis. We don't have enough investment in renewables. We don't have enough investment in oil and gas. We don't have enough investment in the infrastructure itself. Our power grid is still old and need to be renewed. We have a serious problem. People do not understand one important fact, that electric vehicles are very heavy.
Welcome to the Rose Show podcast. Thank you so much for joining us. I have the honor of being here with Dr. Anas Alhajji. He is the world-renowned energy markets expert. He's a researcher, author, speaker. He's written countless papers, articles, and columns. He advises governments, corporations, institutions, and investors on energy market issues. He is also managing partner at Energy Outlook Advisors, LLC, and so much more. So how are you doing today, Dr. Anas?
Well, it's fine, but it's very hot in here in Texas. So as long as we have power, we are fine.
Exactly. As long as you have the energy, the power to stay cool with the AC inside. Dr. Anas, so grateful to have you here today. There's so much misinformation between the narrative and the data. And we hope that you can bring us the reality and truth of what's really going on in the energy markets and the oil markets. Now, could you please begin by just telling us your background and, your vast experiences in the oil and energy markets?
Well, it started as a kid playing in the background of my grandfather's gas station. So the joke is, when people smell gasoline, they get sick. When I smell gasoline, I get homesick.
Wow.
I got my master's and PhD from the University of Oklahoma, which was one of the top universities in the field historically, and still one of the top universities in the world in this field. And I moved to teaching. I moved to Colorado School of Mines, one of the great engineering schools. Then moved to Ohio. After Ohio, I moved back to the private sector. I was the chief economist for NGP, Energy Capital Management, known in the industry as Natural Gas Partners. Most of my work basically was in oil and gas, but I've done a lot of work throughout the energy sector. I did work as an advisor to governments and companies. Of course, we cannot divulge any of the information there. But generally speaking, one of the blessings of working in the energy sector, there is never a dull moment. And we are going to talk about a lot of things today regarding this point.
Thank you so much. Very exciting to talk about the truth of what's really going on in the energy and oil markets. And I believe you told us before the recording that some news came out today. Would you like to share that with everyone?
Well, we have two publications. We have the weekly newsletter and we have the daily energy report. And in the daily energy report that we published today, we posted two charts from the International Energy Agency. So the International Energy Agency, as you all know, it is the one that carrying the green flag and solar, wind, etc., away from fossil fuel, and they are along with others basically are pressuring African countries to go green. And we have John Kerry, who is the climate czar, going to Africa, basically trying to convince the African leaders to go green. We looked at the data, we brought in those two charts from the International Energy Agency, and it shows that Africa is greener than Europe and greener than the United States. And the reason why, because if you look at the definition, they added biofuel, biomass to green energy. And the number one source of energy in Africa is biofuel and biomass. So all of a sudden, they have more renewable energy as a percentage of their energy use than Europe and the United States. So why they are pushing them to get rid of the biomass, get rid of the biofuel, to use solar and wind? And who is going to pay for that? They promised them $100 billion just a couple of years ago, and they haven't seen any of that money yet. And regarding this point, we are seeing a major change in narrative about climate change policies. Not climate change. The discussion is not about climate change. The discussion is about which policies to implement to fight climate change. It is very clear that the European approach have failed. We've seen Europeans renege on their policies. We've seen their oil majors. Every single oil major basically reneged on its promises to cut oil production. Now they are going for full investment in oil and gas. And they lost their credibility on the climate when they decided to give subsidies to their population to consume more fossil fuel last year, which led to increase in gasoline consumption throughout Europe at a time when everyone was expecting gasoline consumption will decline with the penetration of electric vehicles. The narrative is changing because the oil producing countries have their own way of looking at the way we fight climate change. India and China, they have their own way. And the African countries, they have their own thinking about it. They are literally, and we heard ministers basically repeating this again and again, they're saying, look, you have 300 years to become who you are right now. And now when I want to be like you are telling me I can't.
Well said.
So there is a big push. And now we have COP28 is going to be held at the end of November in the UAE. With that, I think it's going to be a historic meeting because the narrative is going to change. And mark my words for this, that those countries are going to literally focus on every word in the agreement, on every word. And they want to make it as loose as possible. So there will be no commitment from any of them. So we'll see a change in that narrative. And this is an important lesson for everyone in the energy industry. Because if those countries are trying to change the climate change narrative, and if they can, it tells you that those companies and funds that are divesting from the energy industry are literally the main contributors to climate change because they are not at the table. If you divest, you have no say. If you stay at the table, you have a say. You can make the change, but running away from it and giving the assets to someone who does not care about climate change, you just contributed to climate change. So divestment is not the answer in this case. And the lesson out of COP28, I think this is going to be the main lesson.
Excellent points there. You know, it's always important to look under the hood, look at the definition, and look at the changing narrative. We'll definitely be watching that upcoming at the end of this year. Excellent points there. Very interesting. This is fascinating. I have to say, even for people who aren't watching the energy markets, this is very important for everyone to understand. I want to start with back up and go to demand. I think that's the key. They've been saying this for years, that the demand is peaked, but it looks like oil and gas demand is rising, and that 2024 may be a record high. Could you tell us your thoughts on all that?
Yes, we published a report on this. I will explain it in a few minutes. But today in our daily energy report, basically, we highlighted the IEA report saying that coal, not oil, coal demand is going to continue its record high numbers in 2023. Where is the problem? The problem is the IEA itself said a few years ago that demand for coal peaked in 2014. And that's coal. We've seen the war against coal all over the world for over 20 years. And yet coal continued to grow. Coal demand continued to grow. with this extensive war against it. So why people think that oil demand is going to peak very soon, and the war is not as severe against oil as severe as coal. So that's number one. Number two, when we talk about oil demand, by the end of 2024, and this is based on a report we released last week, OPEC believe that global oil demand is going to reach 105 million barrels a day. The International Energy Agency is not that far away. It's about 1.45. Where is the problem here? The problem is 3 years ago, just before COVID, the expectations were we will reach 105 by 2028. And now by 2024. So the demand basically is way stronger than what people believe. Remember that BP and others and many analysts predicted that oil demand has peaked in 2019. And now, between 2019 and the end of 2024, we have 6 million barrels extra, additional demand, 6 million. And we talk about demand, I just want to clarify a very important point here, because people do not realize this point. If we look at renewables worldwide, renewable energy barely compete with oil. There is no competition between oil and renewable energy, especially in Europe, United States, Japan, North Korea, South Korea, India, and China, which is about 80% of the global oil demand. Why? Because renewable energy is used to generate electricity. And oil is rarely used to generate electricity. Even in India and China, the role of oil is less than 1%. So even if they double renewable energy, triple it, it has no impact on oil. But people do not know that. They think, well, more renewable, that means less oil. No, that's number one. Only 3% of total oil demand today, only 3%, about 3 million barrels a day, are used in power generation worldwide. And those 3 million are mostly in oil-producing countries and in islands that are far away from everyone, where the easiest way to get energy is to ship oil to those islands, which means that oil demand in those places is well entrenched and very hard to substitute. That's it. The other issue is, well, electric vehicles. They say, well, electric vehicles are going to destroy oil demand. Well, I already mentioned earlier that gasoline demand increased in Europe since last year, despite the heavy penetration of electric vehicles. And here we have a serious problem that we highlighted in our report in the recent days, that if you look at the media, and that applies to most of the media, because we are collecting all those items from around the world. We are talking about most of the media. They are reporting the quarterly results of the auto industry. So they are looking at sales per company, per car, per brand, etc. They are reporting those in details, in numbers and percentages. Only when it comes to electric vehicles, they are reporting only percentages. Only percentage, no numbers. And this shows you the bias of the journalists and shows you the bias of the media in this case when they do this. So the last one that we cited today in our report is Hyundai. We've seen many reports, whether from Korea, from Asia, from Europe, from the United States. All of them, they publish the results in details, in numbers and percentages. But there is a section for electric vehicles, and that section does not have a single number. It's all percentages. Sales increased by 143%. Well, give me the number. What is the number? Could be 5, could be 50. What is the number? Well, here is the joke. All Hyundai electric vehicles in the United States, all the sales since the beginning of the year until today, replaced only 600 barrels of oil. 600 barrels. Just like few stripper wells in Texas. 600 barrels. But people read 143 increase of 143%, and they say, you know what? Everyone is buying electric vehicle except me. Probably I should buy one. But not knowing, basically, the number is very small. They did that with Ford when they released the results, and they talked about the Lightning, F-150 Lightning, the truck. And they talked about the increase as percentage, and the numbers are just crazy. I mean, the percentages are crazy. Ford sold only 900 trucks in the second quarter. That's it. But they don't show the number. They show the percentage. It doubled, tripled, whatever. They talk about the percentage. So we have a serious problem in terms of exaggeration when we talk about the oil demand. We have a lot of exaggeration. I'm going to tell you another story for your audience, which is extremely important, without mentioning any names. A major consulting house that publishes one of the most important, supposedly one of the most important reports about renewable energy and electric vehicles in the world. They wrote in the report that this big city is going to replace all its buses and is going to have all electric buses, all electric. And that will reduce oil demand by 60,000 barrels a day. So I called them and I said, well, you guys have a problem. And they said, what is it? No, we have a lot of people working on this. The modeling is right. And we did this and we did this. Try to kind of brag about how sophisticated their models are. I said, forget about models. Okay. Forget about PhDs, masters, and university degrees. Forget about all of this. I know one fact, that city does not have a single bus that runs on diesel. It's all run on CNG, compressed natural gas. So how you are going to reduce the oil demand while all the buses run on gas? Where did it come from? Where did it get the idea of 60,000? It will reduce the demand for gas. It does not reduce the demand for oil. The most famous province in China that switched all the taxis and all the buses to electric. And the most famous city in that province. I wrote the report in 2008 when they were shifting to CNG, because I work for a company called Natural Gas Partners, where natural gas was very important. We wanted to know what's going to happen to natural gas, what's going to happen to LNG. I wrote the report at that time about the impact of shifting this province to natural gas. All they did basically is shifted from natural gas to electric. Yet those companies, those consulting houses counted that, all of it, as oil.
Wow. Wow. Thank you so much for mentioning that. This is key. Everyone needs to know the truth here. Unbelievable, this bias. And everyone know, I want people to know that when you present in percentages and you cover up the numbers, you can make data look so much better. Going from 1 to 2 is 100% right there. So absolutely. Why, Dr. Anas, tell us, what is their agenda? Why this cover up? What are they trying to do to us?
Well, let me put it this way, because we have a serious problem. Yes, we are talking about, we are here in a democracy in the United States. European countries have democracies, but democracies have their own limitations when your job is on the line, or your attendance at a conference is on the line, or your reputation on the line. In a sense, you have to maintain the appearance of being green. And I and others basically were delisted from conferences, although they are all conferences, because we said what I was saying today. You have to look more green to be accepted as a speaker at those conferences. Well, luckily for me, I don't need anyone. I'm financially stable. Everything is all right with me. I don't need to be hired by anyone else. So I am fine. I can say what I want to. But for the young men and women out there, they need a job. They need to do their things. If they are young academics, they have to conform to the narrative so they can get promoted. And in some universities, they can get tenure. Otherwise, they cannot. So yes, we can talk about democracy until the morning, but it's really a democracy with some limitations.
Well said. Thank you so much for that. I also am independent, and that's why we're here today, to speak the truth, and that's what we want. And so grateful to you. Thank you so much, Dr. Anas. I want to talk about demand versus consumption. And I think people confuse the two. Demand is not consumption. Could you please tell us about that?
Yes. We published our 2023 oil market outlook in early January, at the beginning of the year. Most of it was written in the second half of December. And in that outlook, luckily for us, I think this is in terms of forecast, and it is, by the way, available. There is no paywall. People can just search for EOA 2023 oil market outlook, and they can find it on the web easily. And they can read through it, and they will find out that everything that happened in the oil market basically was mentioned in it. So we really nailed it, but we missed a couple of points, and I consider them failures. The first failure is the idea that we did not believe that China will refill its SPR. Now it did, and that's going to affect the balances in the second half and next year. And the second point is, we knew, and we mentioned this, that other OPEC Plus members are going to buy crude and products from Russia. But we did underestimate the amount. They bought way, way larger than what we expected. And why this is important? Because they were buying the cheap Russian products while they were cutting their own. That changed the balance. That changed the balance. But one of the main issues of this outlook is we were one of the first ones to say that China's opening is not that bullish.
Mm-hmm.
And that's why our demand numbers were lower than anyone else early in the year. And the reason why we were not bullish on China, because the idea that a country will open up and all of a sudden everything will go back to normal in every factory, in every city, in every household, in every university, in every school, in every military base, etc., within a short period of time is a complete nonsense. You are going to have a surge in transportation demand, but the rest of the economy will take time to recover. So we realized that point. We also realized that some industries depend on the others, which means that all industries cannot grow at once. One industry has to grow to a certain limit. It can feed the other industry. So the other industry can move forward. And this dependency of various sectors on each other basically is very important to understand. Then we ended up with people basically saying, look, you are wrong because the opening of China is going to increase demand for oil. Look at their imports and look at the surge in transportation demand. Well, there are two reasons here they need to understand, and that will answer your question directly. The first one is because of the lockdown in China, a large number of people, in millions, of students and soldiers got stranded in various parts of China, away from their families for a very long period of time. When China opened all of a sudden at the beginning of the year, they wanted to get those people home, so they chartered hundreds, probably thousands of planes to take them home and then bring them back. So transportation demand, of course, buses and everything else. So transportation demand surged above normal. And some people thought, oh, well, this is the trend. Well, it wasn't. It was a one-time event, and then it went back to normal. So that's number one. Number two, imports do not tell us much if some of that oil is going to storage. If some of that oil is going to strategic petroleum reserve. That's the point I mentioned that we missed in our outlook. We missed the point that China is going to rebuild its SPR. So the difference between consumption and demand is that storage. They are, yes, you look at the imports are very high, but their consumption is lower, and they are storing that oil in strategic petroleum reserves and other inventories. And if we do this, we understand that the consumption in China is way lower than what people expected. And speaking of consumption versus the demand, here we need also to distinguish, and this is very important to understanding OPEC and OPEC Plus, we need to distinguish between supply and production. A country might say, look, I reduced my production by 1 million or have 500 or whatever the amount is, and you look at their exports and they did not decline as much. And say, well, they are not cutting then. No, they are cutting, but they are using oil from storage and they are releasing it to the market, so their exports are higher. So we have to distinguish here between production and supply to understand OPEC behavior.
Well said. I like that. Production and supply. And we're going to talk about China and they're building their inventories, but you said Russia, and I want to start with Russia. Have the European sanctions against Russia affected them in any way negatively, like it was originally intended?
Well, a couple of things here. Sanctions in general never worked. So if you study sanctions for the last 120 years, sanctions never work. And the idea here is, why countries impose sanctions? You impose sanctions because you want the other country, what we call the targeted country, or the leadership of the targeted country, to change its behavior or to return to the previous position before they make the move. So we want to force Putin, for example, to go back behind the borders and just leave Ukraine alone. If you look at sanctions from this point of view, sanctions never work. Sanctions never force the targeted country or the leadership of the targeted country to change its position. Look at Cuba with Castro, 50 years, nothing happened. Look at Iran, nothing happened. Look at Venezuela, nothing happened. Look at Syria, nothing happened. Look at Sudan, nothing happened. So sanctions do not work. What you need basically is, the only way sanctions work if they are associated with a military action where you surround the country completely. But if you are going to use military action, why you need sanctions in the first place? You don't need it. So sanctions never work. One fact people have to realize is this, and the story now is very clear to us at least. We have a media outlet in Arabic called Attaqa, ATTAQA, which means energy, ATTAQA.net. Today they posted a video for Condoleezza Rice, the former Secretary of State during the Bush years, George W. Bush and the invasion of Iraq. The video is from 2014, and of course, because it's in Arabic, they translated that to Arabic, but they kept the sound in English. So I will post that on my Twitter feed after we finish today.
Right.
In it, in 2014, she said everything that happened since the invasion of Ukraine. Everything. I mean, you will be shocked, because she said, look, I know this is inconvenient, but we have to punish Putin. And that punishment has to include sanctions on oil and gas. I know this is going to affect the economic relations and trade deals, etc., but we have to hit them really hard and replace it with oil and gas from North America. And Europe has to depend on us, not on Russia. That was in 2014. So I will post this video after we finish today on my feed. That was published by Attaqa. The idea here is, when you look at the deep state in the United States, regardless of Republicans and Democrats, that's what the thinking long time ago. The thinking is, this European dependence on Russian gas is really dangerous. Okay? They knew that. Regardless, I'm not talking about Republicans or Democrats. This is the deep state working here. Well, if Condoleezza Rice said this in 2014, guess what? Putin, even through private channels, knew about it. Knew about it. So what Putin did, and why, if you look at the impact and you look what happened after the sanctions were imposed on Russia because of the annexation of Crimea. Every time they signed the declaration of cooperation of OPEC Plus in 2016, every time they met and they decided to cut production, Russia refused to cut. Every time they met, Russia refused to cut. And it was very clear that Russians do not want Brent prices to go above $60, while the Saudis wanted prices to go above $60. At the beginning, we thought that there, well, this was real too. I mean, our thinking was right, but it wasn't the main reason. The thinking was If Russian revenues increase, then the ruble value will increase against the dollar, and the cost of oil and gas in ruble will increase substantially, and therefore the profit of those companies will shrink. So they wanted a very low ruble because most of their cost is in their domestic currency. So they want to make money. But we found out later that was not the case. The Russians understood that the U.S. shale revolution, the U.S. shale oil revolution, is bringing a lot of gas. And that gas is going to get transformed into LNG. That will go to Europe and substitute for Russian gas. And therefore, if they keep oil prices low, shale production cannot grow. And if shale production does not grow, then gas production does not grow, and then those LNG projects will not materialize. So they knew that. And that's why they were trying really hard. If you go back and search the Wall Street Journal and others and look at how Putin wants to kill shale. Putin wants to kill shale. The Russians want to kill shale. And the Saudis said, I have nothing to do with it. That was the true position. The Saudis have no interest in killing shale or shale growth, but Putin does because of the gas. And what happened? That's exactly what happened. The shale revolution enabled the Trump administration to impose sanctions on Venezuela and to reimpose sanctions on Iran. Without that, they would not be able to do that. The shale revolution enabled Biden to secure Europe. Otherwise, Europe now would have yielded to Putin's demand, and probably he would have taken Ukraine all over right now because of that. So the shale revolution, I know a lot of people badmouth the oil industry and badmouth the gas industry, but the political gains from it are unbelievable. They are priceless. And for the Biden administration to go and badmouth the oil industry while the amount of political capital they built from the oil and gas industry is just really, I don't know how to label it, but it's just crazy. The benefits from the shale revolution to the Biden administration is priceless. So sanctions on, in a sense, I just give you the historical background so you know what the issues are. So it was very clear that Putin himself wanted to wean his dependence on Europe early before realizing this. He said, what if I don't want to get strained? So he started building pipelines to China way before the invasion of Ukraine. He started looking for other outlets, etc. But probably he did not expect the speed of the LNG industry in the United States. I think he really underestimated the US LNG industry because it took only a couple of months. And here we go. We are supplying 40% of gas in Europe in a very short period of time. So when you talk about the sanctions, one side of it, he really wanted to divert dependence to Asia and other places. And the rest came because of the sanctions, but not the price cap. We have to distinguish between them. The price cap is a joke. The price cap has no impact, but sanctions do. But they don't limit revenues. They just redirect trade. So they don't block it. Putin is still in Ukraine. So we did not achieve any objective in hurting Putin. In terms of revenues, by the way, and I think this is another scandal in the media with that I would like to explain here.
Please.
The price cap was imposed on December 5th, 2022. December 5th. 2 weeks later, the Secretary of Treasury, Yellen, said, look at Russian oil revenues. They already declined because of the price cap. That was a lie. Why? Because everyone knows that the implementation of the price cap was going to happen later, not that day. And between the time the companies export, get paid in the bank, and pay their taxes, and the government process the money, and then it becomes part of their revenues, it takes 6 to 9 months.
Data lags.
And all of a sudden she said, 2 weeks, 2 weeks, and Russian revenues are declining. It's a complete nonsense. The other issue is, if you look at oil prices in the first half of the year, the global oil prices, they declined by 28%. Russian revenues declined by 24%, and Russian revenues declined by 34%, which means that more than the 24%. So let me repeat that. The oil prices declined by 24%. Russian revenues declined by 38%. So yes, they declined more than the actual, but people said, oh, that's the impact of the price cap. No, because the shipping costs from northern Russia to China and India, which is a very massive distance, increases and eats up about 10% of that. So you have to take 24% plus 10% is 34%. We are left with about 4%. That's the Russian discount. That has nothing to do with the price cap. And the fact is, if they really believe that the price cap is good, the G7 who imposed the price cap has Japan in it. And the only way they can agree to it, to give exemption to Japan. Japan is exempt from it. And to show you the impact of the Russian media on the US media, the Russian media basically took advantage of that and the fact that people do not know that Japan was exempt. And they published stories that Japan is buying the Russian oil at $70, $10 above the cap. And then the US media took it, and they mostly kind of people on the far right, they say, look what Biden doing. He said he's going to do this, and the Japanese are paying $70 while the price cap is 60. Well, Japan was exempt from first day. It just was Russian propaganda, basically, that found its way to the US press in this case. It does not apply to Japan. So if it was really good, why they exempted Japan? That's number one. Number two, the oil from Sakhalin, which is in the east near Japan, has always been sold above 60, and no one said anything. And when some news media basically reported that Indians were buying oil at more than $60, Secretary Blinken was in India for the G7 meeting that day. And he literally, he just went public and said, no, they are not doing this. How do you know? In a sense, we understood it as a green light to India. Don't worry, just import the Russian oil and don't worry about those reports. Now, as we speak, Urals are above $60. And no one is saying anything. Why? Because the Biden administration understands that they really need to keep oil prices low. Because if they put Putin in the corner and he decides to cut oil production, or for some reason we see curtailment of exports from Russia, oil prices could increase by $5 to $10 above current levels, which the Biden administration does not want to, given the high inflation rates that we are experiencing in the United States. So literally they shot themselves in the foot by adopting the price cap.
Wow, that is amazing. I mean, they're data lag. So it's like 6 to 9 months. Absolutely. How could they expect people to believe that? And I guess they did. And it's actually due to the shipping costs and not the price cap. This is amazing, Dr. Anas. Wow. Everyone needs to know this. Excellent points there. Thank you so much for that. You know, you mentioned LNG, and I want to ask you, I think I read on one of your papers recently that you believe that the U.S. could be the top LNG exporter in the world in 23, going ahead of Qatar and Australia. Do you believe that's possible?
It is already. It is a fact on the ground that the United States is number one, is going to stay number one probably until 26, 27. And
Wow.
if we see delays in Qatari projects, this will even last longer. But again, we go back to the same point. It is the U.S. shale revolution that make that change.
Exactly.
It is the U.S. shale revolution, by the way, that enabled Biden to withdraw 180 million barrels from the SPR last year. He would not even dare to do that without the shale revolution, because the shale revolution added, since 2010, added 9 million barrels, as much as what Saudi Arabia is producing today. So the lack of appreciation of the shale revolution by this administration is amazing. They are literally capitalizing politically on it,
Politics.
but yet they are against it.
Very well said. Thank you so much for that. Now, the SPR, you mentioned that. I want to go right into that. Many people are concerned. I take it you are not concerned about them releasing from that. Tell us your thoughts on this SPR and how it could be a political football coming up in the election that we have next year.
Sure. We published a report on the oil market in 2024. And the number one issue, basically, we looked at in 2024 that are the elections. And we are certain that the Biden administration is going to use the SPR in the summer of 2024 to lower gasoline prices. Whether that works or not, we will see. But the idea here is they are going to do it. And the reason why they are going to do it, this is just a clarification for everyone. Long time ago, when the SPR was established in the 70s, yes, it was for emergency. But politicians kept playing with it and changing the language to the extent that SPR right now can be used for anything. So I'm not defending President Biden, but the fact is he can use it, and any other president can use it for any reason, because the language has changed significantly since the 70s. First of all, when we have Republicans attacking Democrats, I'm being very apolitical here. I'm not with either side. I just want to state the facts here. When Newt Gingrich basically did the Republican Revolution and recontrolled the House and the Senate during the Clinton years, they tried to literally dismantle the Department of Energy and the SPR. It was the Republicans who want to get rid of the SPR completely, because they think the idea does not fit with the competitive market. Competitive market does not have an SPR. Let the companies handle it. Let the companies pay for it. That's the competitive market. And they don't want the government basically to use it as a tool for political reasons, etc. That's what they're thinking. It was Rick Perry, when he was presidential candidate, that he wanted to get rid of the SPR and the Department of Energy, a Republican. It was President Trump in 2018 who wanted to sell half of the SPR, which is more than the 180 that the Biden administration released. Why? We have many people on both aisles basically wanted to reduce the size of the SPR in recent years. Why? Because they realized, why do I need to store light sweet crude when I have a shale revolution that is adding more oil every day of light sweet crude? My production was about 6 million. My production increased to 13 million. Why I need to use the taxpayer money to have 700 million barrels of oil stored in the SPR? Managing it every year costs me hundreds of millions of dollars, just managing it. So why I need to do that? So many people on both aisles basically realize that with the shale revolution, I need a smaller SPR. And definitely I need less light sweet, because we are exporting today we are exporting more than what Iraq exports to the world. And most of that is light sweet. So why I have to store it? I'm exporting it. So the logic is there. When the Biden administration used it, he literally changed the whole literature of the SPR. Everything we studied in the last 30 years has changed. Any study, any new student who is doing master's or PhD right now, and they are going to do the SPR, the whole old literature basically is irrelevant, completely irrelevant. And the reason why, because during the Bush years, basically, I wrote a letter to officials in the United States stating the conditions for effective use of the SPR. And there were two conditions, there were several, but two of them stands out, that the Biden administration basically did exactly that. First of all, the amount has to be extremely large. The idea of releasing 30 million, 60 million never worked. And the whole literature in the last 30 years was based on the 30 and 60. So it has to be large. And then the statement by the president has to be in a certain way. It's not like, oh, we are releasing 30 million because we have a crisis in the Middle East or we have a hurricane in the Gulf of Mexico. No. The statement should be, we are releasing 1 million barrels a day for the next 6 months until prices decline. And if they don't decline, we'll release more. It has to be a very direct message to the companies, to the public, to businesses, etc. And that's what the Biden administration did. And if you look at what they sold, first of all, every barrel of the SPR was sold during 2022 was sold at loss from an accounting point of view. Every barrel was sold at loss. Again, from an accounting point of view. But you start looking at the economic benefits and the political benefits of it, and they are priceless. They are completely, in a sense, Ukraine was saved, Europe was saved, US economy was saved, the world economy, because the shale revolution subsidized the whole world economy, not only the United States. Prices would have been, without the release of the SPR, oil prices would have been around $140 in 2022. They declined to 70. So we saved the world with that release of the SPR. Of course, behind it we have the shale revolution. So we have to remember all the time that the shale revolution is shielding that. But the benefits, the economic benefits and the political benefits are priceless in this case, and they more than compensate for all the accounting losses in this case. So it did change the literature, change the views. And the bottom line on the SPR is, if you use it correctly, it's really worth it. It's a policy tool. It's an economic policy tool. It's a foreign policy tool. It's a strategic tool. If you use it right, you win. The problem is when you use it in the wrong way or for political advantage for a party or a person, etc., then we have a problem. But if you are looking at the whole economy, you're looking at the US foreign policy, the strategic issues, it was a big win.
Thank you so much for that and telling us the truth behind the SPR. Many people were concerned about it, but I agree with you completely. You got to look at the big picture. And shale revolution, I urge everyone to Google it, study it, learn about it, and understand it, because it seems to be.
And by the way, we still have about, because they are buying 12 million barrels right now, by the end of the year, we'll have about 350 million in the SPR. This is way, way more than enough for any emergency.
Yes.
The largest emergency we had, we released only 60 million. So we still have a lot. The people need to look at this, even if they refill it later, need to look at it as a strategy to change the quality of the crude in the SPR. Because the shale revolution is producing a lot of light sweet crude. I don't need to store light sweet crude. I need to store more medium and sour. So I need to make the replacement. And that's why you see the announcements for the 3 and 3 and 6, that's million barrels that they are buying. All of them are medium sour. None of them are sweet. Because I think from the old days, that's what they wanted. They wanted to replace it with medium sour. Why? You look at US imports today, 7 million barrels that we are importing from overseas, almost 98% of that is medium sour and heavy, but it's sour, okay? And you look at the Gulf of Mexico where we have the crisis.
Sour.
The Gulf of Mexico where we have the hurricanes, the Gulf of Mexico produces sour crude. So when we have hurricanes, we lose sour crude. We need sour crude in the SPR to protect us. In this case, we don't need sweet.
Wow, very important. I know, I think I read there was a mixture of 1/3 sweet, 2/3 sour. Is that what the blended? Is it blended or?
No, it's not. No, there is no blending in any crude. That's I'll explain that in a minute. I think, and this is where this came from, I think we will end up, after they start refilling, whenever this happens, we'll end up with 2/3 sour, 1/3 sweet. But when looking at the conditions to refill the SPR, there are two important conditions people have to realize, because there is a lot of talk on Twitter that is completely off.
Yes.
The first one is it has to be American produced. So we cannot get it from Canada, we cannot get it from Venezuela or Saudi Arabia or anywhere else. It has to be US produced. And the second one is it cannot be blended, because you cannot store blended crude for a long time in caverns. It has to be original oil. So it cannot be blended. And therefore, the shale producers are not going to benefit from it. So shale producers are not going to benefit from the companies that benefit the most from refilling the SPR, especially when prices are low, are the companies that are producing in the Gulf of Mexico. And one of the ironies is that California lost big time. California is one of the largest producers historically of oil in the United States. They have a lot of sour crude. They would have benefited from refill of the SPR, but because of their policies, basically, they are killing their own oil industry.
Fascinating. Very interesting. Did not know about that with California, but very interesting to know. Thank you so much for that. I want to talk about production. We talked about demand, we're talking about SPR. Let's talk about production and OPEC. Their last meeting last month, and I believe I read in one of your papers that it was bullish and that it was actually a positive. Tell us your thoughts on that meeting and how it affects the prices and supply going forward and your outlook.
Sure. Last December, we published a report on what should OPEC do. And our conclusion was OPEC should cut production immediately, otherwise they will suffer the consequences. And that's exactly what happened. They did not cut, and they suffered the consequences. Prices declined, etc. Our recommendation was giving up the monthly meetings was a big mistake. Why? Because when they have the monthly meetings, the role of speculators was limited. The speculators were kind of mere travelers and just followers. And they were waiting what's going to happen every month. Once OPEC at the end of last year decided no more monthly meetings, I'm going to meet just twice a year, then speculators took over, and we had the banking crisis and the possibility of recession, etc., and just prices plummeted. And by March, OPEC realized the mistake, and they started to kind of negotiate what they needed to do. And they found out that their small producers are refusing to cut. And the idea was, okay, I couldn't meet my quota when demand was going up. You big guys benefited from it. Now it's declining. You take care of it. It's not my problem. And OPEC votes are by consensus. Every country, one vote. So if one country rejects the offer, then there will be no deal. And the solution basically was to resort to voluntary cuts, as they did when Saudi Arabia and Russia and Kuwait, Iraq, and UAE announced voluntary cuts. And then the Saudis said, you know what? Instead of those monthly meetings, I'm going to play it differently by saying this 1 million barrel voluntary cut they have, I'm going to announce that every month, whether I'm going to have it or not. So instead of the surprises of the monthly meetings, I have the same surprise, but I don't need to meet. And that's what they are doing right now. They are every month, they are announcing what they want to do the next month, trying to kind of be in the driver's seat instead of the speculators. Of course, their problem is they are literally fighting against the Fed. The interest rates, the value of the dollar. Why? Because oil is priced in US dollar, and if their Fed cuts interest rate and the value of the dollar goes up, oil prices goes up for everyone else in the world, although the Saudis will not benefit at all from it because oil price is still the same in dollars. But the other countries basically are suffering. That kills the demand or demand growth, and then the Saudis will be affected negatively. So that's where the problem is. For our outlook, from the beginning of the year, we were extremely conservative. Our price forecast was the second from the bottom. The demand was literally the lowest. So everything we have in our outlook materialized. The only difference is going to be toward the fourth quarter. We're very bullish on the fourth quarter, but now because China built that SPR, and we are certain that China very soon is going to start using their SPR to prevent their oil prices from going to the 90s and 100. We did not count that. We did not count that build in the SPR. And therefore, we are still bullish, but not as bullish as we were at the beginning of the year. For 2024, we are still bullish. Of course, all of this assuming there will be no recessions. We are still bullish on 2024. If everything goes according to what we see today, we are going to have a very tight market in 2024 simply because demand is going to continue to grow while supply is not going to grow at the same rate. And the related issue to that is we believe that the lack of investment in Russia is going to start showing in 2024, which means that the Russian oil industry is going to suffer later on because of that lack of investment, which means that we are going to see lower supplies from Russia regardless in this case. But we are still bullish on the remaining of the year and 2024. We outlined all of that in our newsletters.
Thank you so much for that. I know that you said that you weren't as bullish because of China releasing their inventories. Do you think that is there a certain price point where they're going to start releasing them? And could you tell us about that?
Yes. Historically, when we did our modeling, we thought that the threshold is going to be around $75.
Oh.
That's for Brent. After the fact, we realized it was 70. It wasn't 75. So they released the oil once prices exceeded 70. So we were a little bit off on that. Right now, it's almost impossible to do the calculations. We can do something kind of rough calculations, but not as exact as we did before for a simple reason, because we don't know how much they are paying for the Russians. So they are getting a discounted price, and therefore that threshold of 70 or 75, even if prices go to 80, if they are getting oil at 50, for example, then they can stay at 80 without releasing the SPR, because the average of both is way lower than the threshold of 70 or 75. So we have an issue here with the calculations because of the averaging with the Russian prices. So that's a big problem. Related issue here, and the audience, I think many of the audience already know this. Despite the sanctions, Russian oil is arriving in the United States. Despite the sanctions, Russian oil is arriving in Europe. And in Europe and the United States, it is arriving legally, literally legally. If you look at the statements, when they did the agreement for the EU on the sanctions, they literally said that they can import Russian oil as long as it's been changed in a third country to something else, which means that if India and China can refine it and send it as gasoline and diesel to Europe, that's legal. There is no problem with it. And the Europeans basically been paying the high price, playing the game, while the Chinese and the Indians are making the money. Here in the United States, we are importing gasoline from India or other products from India that is made from Russian crude.
Wow.
So Russian crude, Russian oil basically is arriving in one way or the other, despite the sanctions.
Interesting point. That's very important. So it's a Russian source. However, if another country alters it or does something, refines it or does something, it can still come to the US. That's an important point there. I'm not sure if everyone is aware of that. So we're all interconnected. And now we want to talk about the prices and the opportunities in the oil market. The narrative is changing. People are realizing they're more bullish on oil. Now, you think China releasing its barrels will help keep the prices down? How high do you see oil getting, in your opinion, this year into next year? You know, there's a lot of misinformation out there. They're saying oil 150, 200, they're saying crazy numbers. But bring us some reality to that.
The possibility of 100 earlier in the year when we did our outlook, the possibility of 100 was there. But now it's no longer there because China is going to use its SPR, as we mentioned, to prevent that from happening. So absent a major political crisis in an oil-producing country. No 100 this year. So 80s, yes. 90s, yes. But no 100 unless we have a major political crisis somewhere. And of course, that cannot be predicted. The issue that we need to focus on here is this. This idea of $150 and $200, and there was a time when even Goldman Sachs and others said 250, is a complete nonsense. And the reason why, because we are going to have demand destruction way before that. There will be a time, and we have enough evidence and data to show that even public transit ridership will increase substantially after gasoline prices reach a certain level. So people will say, it's cheaper for me to take the train. It's cheaper for me to take the bus. It's cheaper for me to do this. People will start carpooling, use their bikes in places. Some places they walk, because the idea, people miss the point that what is the substitute for gasoline? Well, walking is a substitute. The bicycle is a substitute. Public ridership is a substitute. It's not necessarily you focus only on what you put in the car. Your problem is with the ride, not with the gasoline. So we will see demand destruction as prices rise, and people cannot take 150 or I'm talking about like $7 gasoline to $10 in the United States average. Americans are not going to take that. There will be major changes, and those changes are immediate. But probably the best example, when I was teaching at Colorado School of Mines in Colorado, I wanted to buy an SUV, and I saw an ad for a trooper. So I called, and a lady answered the phone, and I started asking her about the car. And I told her, what about the AC? And immediately, like just on the spot, she said, well, it has windows. Because in Colorado, the substitute is you open the windows. You don't need an AC. So in a sense, we got to think about the substitute in energy in a wider sense than what some people think. But the issue here is high prices might happen like we've seen in September 2019 when we had the attack on Aramco. We've seen a $20 jump in prices in seconds, etc. Yeah, but it won't last. 2 hours later, basically, we've seen a decline. By the time the market opened, we lost all the $20. But in general, there is a range, and above that range, once we go above it, we will see demand destruction.
Agree completely. Demand destruction is real. Many people like to think it's inelastic. However, it's very elastic, and people will find other ways. And like I like the example about opening the window. I think that's funny. And it's true. People will be biking, walking, and and a lot of people like to say, there'll be a rise in EVs, but there are other ways of transporting around. I want to talk about renewables. And
may I just ask one point? Add one point here.
Please do.
Because when we talk about those substitutes, and we talk about the various options, etc., we have to remember that work from home is a substitute.
Yes, absolutely.
And one of the reasons why, and this is, in my opinion, one of the reasons why gasoline demand this year is lower than the previous years in the United States is work from home.
Mm-hmm. Excellent point. I talk about that quite often as well, how COVID changed the way we do business and we do work. And I think most people are not returning to the office. And that's why we have a big decline in increase in vacancies in office in commercial real estate. And I actually did a podcast yesterday on commercial real estate. So it's funny. Great. Thank you for mentioning that. Excellent points there. I want to talk about hydrogen. Okay, we can talk about renewable sources. And I read in one of your papers recently that you believe that 2024 could be a breakthrough year for hydrogen. And could you tell us about that and all the different hydrogen? I know there's green, there's blue, gray, and all the different hydrogens.
Yes, there are all kind of colors, but it's the same hydrogen. It just kind of depend on the source, and the coloring basically just depending on the source. And I think the recent division of those things already done away with the colors. Okay. But in a sense, you have a whole spectrum of ways to produce hydrogen. There is a good part and a sad part about hydrogen here. We know the role of hydrogen. We know the technology over 100 years ago. Way long ago, we knew about it. And the reason why we did not have a way to do it, because the amount of energy, and I'm talking about the green hydrogen here, the amount of energy we put into it to break up the water into hydrogen and oxygen is more than the energy we get from the hydrogen. So it did not make sense. But we have a new development and we have new technologies. And the idea, that's the simplest idea of green hydrogen, is this. Wind is blowing after midnight, producing massive amount of electricity, and people are asleep and no one is using it. So the cost of that electricity is zero. In fact, in many places, they sell it at a negative price, which means that you use it and you get money too. So the idea here is, if the price is zero or negative, you can use it basically to literally break up the water and get the hydrogen. What the advantage of hydrogen here is, hydrogen becomes a battery. Literally, it's you store energy in it. And what the beauty about it is, you can move it around. You can take it wherever you want to. And it's unlike battery where it degrades over time. If you leave it 3 days in the cold or in the sun, it doesn't. So hydrogen as a battery, basically, in this case, because you are storing energy that is wasted. And that's where the economics of it come from. That you are using wasted energy to produce green hydrogen. But the sad part is, European countries in particular, they think, okay, I'm going to use hydrogen, and this is clean, it's going to burn clean, I'm not going to have any emissions, etc. And they import it from Saudi Arabia, from the UAE, from Egypt, from other countries. And that hydrogen basically is made from natural gas. And the idea, the sad part here is, as long as the emissions are made outside Europe, Europeans have no problem with it. Yet, they scream and yell that climate change is a global issue, and therefore you guys have to lower your emissions. But why you need my hydrogen, where the emissions are in my country, and climate change is a global issue? So, in a sense, there is this environmental discrimination, if you want to call it that way. We have a serious problem with racial issues, where as long as this is made in Africa or made in Latin America and the pollution is there and the emissions are there, it's fine. But when it comes to my country, it has to be clean. Because we did this in the past with China. What we did here in the United States and Europe, we sent our polluting factories to China, and we started importing their products from China. And all of a sudden we are claiming, look at our CO2, it declined. Look, it's been declining and our policies are successful. We just exported your factories. That's what happened.
Excellent points there. You know, it reminds me back to college when we used to study NIMBY, it's called, not in my backyard, right? And you know, it's they just want to boast that they have the best policy. We have the best green. We're the best. But then they outsource it somewhere else. Just funny business, I have to say. Thank you for bringing that to light and mentioning that. You know, I want to talk about opportunities, investing opportunities, and what you're bullish on in these energy markets. With hydrogen, we just talked about that. You know, wind, solar had a big, in the markets, was a big boom, you know, with Enphase and a few others of those solar powered companies. What are your thoughts on all of those biofuel and everything?
A couple of points here that people must realize. The first one is, when you have energy shortages and the prices of energy goes up, and then producers have to produce more. And therefore, they need to buy materials to make bricks. They have to buy materials to make pipes. And those who make solar, they need to make the solar panels. Those who make use wind turbines, they need to build the turbines. People have to realize the following. The margin of profit in the oil and gas industry is massive. And what happened is the basic materials used by all energy sources are the same. So whatever basic materials you need for the oil industry, you need it for the solar, you need it for the wind. And when the demand for those basic materials go up, the cost for everyone goes up. But who can afford it? Only the oil industry can afford it. And therefore they can buy these materials. And the renewable energy basically guys will be like, okay, my cost is up, my margins now are very low, I am losing money, and I cannot buy this material because it's so expensive. And therefore they slow down in this case. While the oil industry basically is expanding and making money. And we have enough evidence to prove this point throughout the last 20 years or so. And we've seen it in 2008 when oil prices reached 150, the renewable energy just stalled. But the oil industry kept expanding. In this case, despite the massive increase in cost. So the idea that the audience need to know here is the basic materials are used by all. And when the demand for the basic materials go up, the cost for everyone goes up. And the question is, who can afford now to buy? And who can afford it basically? Only the oil and gas industry. And if the governments decided to subsidize solar and wind, so they can reduce their costs in this case. But I am bullish on oil and gas and more bullish on gas than oil in the medium and long terms. And it's not the lack of investment that people are talking about that's leading to this bullishness. It is the idea that some of the green policies are going to fail. And immediately the moment they fail, by default, the demand for coal, oil, and natural gas is going to increase. Which means that the estimates right now for demand for natural gas and oil in the medium and long term are way underestimated because of that. We already have seen it in Europe last year. We know exactly what happened. People misunderstand that 2022 was one of the greatest years in the history of the energy industry because we learned so many lessons from it. And one of the main lessons we learned in 2022 was that it was a unique year in terms of the substitution among energy sources themselves. We never seen this before. What happened is we have a lot of rain in India and China. Coal mines are flooded, and now they don't have coal. So what they need to do, they need to buy LNG. LNG prices went through the roof. Well, now they have power outages. Well, what do you do when you have power outages? You resort to private generation. And when you use private generation, what do you use? You use oil products. And all of a sudden, the demand for oil went up. Now, rain stops, but no one buys the wet coal. The coal has to be dry. Okay, so natural gas prices remained elevated, LNG prices remain elevated, and oil prices remained elevated. Once coal dried up, they went back to coal, and all of a sudden everything collapsed. We never seen this dynamic before. This is just amazing. So as we go forward, any failure in this relationship among those sources, look at England in September 2021. This is before the invasion of Ukraine. Remember, the energy crisis in Europe happened before the invasion. What happened? All of a sudden, they woke up one morning and there was no wind. The demand for natural gas went through the roof. Prices of natural gas went through the roof. And because they control prices of electricity, 21 companies went bankrupt. 21 power companies went bankrupt in England because of that. And the crisis started. People ended up buying wood in the winter to keep themselves warm. It had nothing to do, by the way, with Ukraine. And the reason why, if you look at the crisis in France, for example, what happened? Nuclear plants stopped. And by the time they wanted to fix them, they have demonstrators blocking the entrance of those nuclear plants. So those who come in to do the maintenance, they cannot do the maintenance. And then they blocked the access to LNG terminals, so they couldn't even get the gas. That has nothing to do with Russia. That had nothing to do with Ukraine. It was European-made crisis. But you start looking at how the substitution worked among various energy sources, it was unprecedented. And therefore, if we have, and as we've seen in Texas too, and when the weather is very hot and the temperature is 105, why it's hot? But there is no wind. If there was wind, the temperature would have been way lower. And since there is no wind, wind turbines cannot turn and they cannot help you. And what you need natural gas.
Mm-hmm.
And the only way you can get those peakers, we call them peakers when they during peak times, is to pay them a lot of money. And prices go up. So this substitution basically leads to the fact that demand is for sure underestimated for oil and gas. And because of the way the system worked and because of this substitution, we think that the demand is going to be higher and prices are going to be higher for oil and gas.
Absolutely. You've outlined the higher demand in coal. We have oil and gas, going to be a record year, possibly next year. Demand keeps increasing. And excellent point you made about the oil and gas companies. They're the cash generators. Whenever I do any fundamental analysis on equities, you always know that it's the oil industry that is generating the profits. They have the money. So when it comes around to buying the material, like you said, all the companies pay the higher prices, but who can afford them? The oil and gas companies. So it makes sense.
Basically, and it's very important. I'm going to read some numbers while I'm talking to you.
Please.
We published a report 2 weeks ago, and we had a large number of charts. And the title of it is Back to Earth, Reality of the Energy Transition.
I love it.
Now, we are not, well, I would like to emphasize the point here that we do need all energy sources. The demand for energy has been increasing for decades at a very high rate, and it will continue to do so. The first fact out of that is that, and we have charts basically showing this, because the demand for energy is increasing, even if you invest more in renewable energy, you are barely meeting the new demand.
Mm-hmm.
And therefore, they are not killing coal, they are not killing oil, they are not killing gas, simply because of that growth. People misunderstand that it's not population or the increase in population or the decline in population that determine energy consumption. It is urbanization.
Mm-hmm.
So we did some calculations. Remember when the Biden administration brought in the thousands of Afghans from Afghanistan,
Mm-hmm.
and they brought many of them to Texas here?
Mm-hmm.
We calculated that for every Afghan family, the moment they landed in the United States and they have an apartment, their energy consumption increased by 70-fold. 70-fold. The millions of Ukrainians who fled Ukraine to Europe, their energy consumption increased by 4-fold.
Mm.
Africans who are crossing the Mediterranean going to Europe, their energy consumption, once they reach Europe and they are living somewhere, then energy consumption increases by about 30-fold. 30-fold. And that's for total energy. So the idea here is all these increases in renewable energy, they are barely keeping up with demand, and therefore they are not substituting for natural gas or coal and others. And that's why the IEA, as we mentioned earlier, is talking about a record year for coal. Coal that the growth should have died long ago. So that's number one. Number two, if you look at the numbers, and that's why we are bullish on oil and gas. If you look at the world primary energy consumption by source last year, which is the most recent data we have, you read the news and what they are talking about oil and coal, and you would think that coal is dead and oil is dead. The largest source of energy in the world is oil at 32%. followed by natural gas, 23%, coal, 27%. Between 2010 and now, the world spent more than $4 trillion on wind and solar and other renewable energy. And here, hydro is not included. More than $4 trillion. $4 trillion, just to put that in context, is more than the GDP of Africa and the Arab world combined, which contains some of the largest economies. Some of them are in the G20, like Saudi Arabia.
Mm-hmm.
Okay, that's how big it is. Despite spending more than $4 trillion since 2010, the share of renewable energy today is only 7% of total. Only 7. So if I spend more than 4 trillion, 3% was already there before 2010. So I got only 4%. 4 trillion, 4%. How much money I need to spend basically to really get rid of fossil fuel? Here is the number for the audience, because I think they'll be shocked for this. China is #1 spender on wind and solar in the world. #1. And compared to the second, by a large margin. Yet, to achieve carbon neutrality, China needs 211 years. And yet they are telling me they will do it by 2050 or 2060.
Oh my gosh.
Okay, they need 211 years. And those 211 years assume that every project they do right now is permanent and does not need maintenance and does not need replacement. India needs more than 300 years. So let's go through the numbers, because the numbers are shocking.
Mm-hmm.
Look at Europe. Most of that $4 trillion on renewable energy is spent in Europe. And that's the total primary energy consumption. It's just not only the power sector. 56% of Europe consumption is from oil. So even if you look at renewable in Europe, only 14%. Only 14%. And you look at the US, and this is what, when people talk about the Biden administration, people have to realize that 81% of the energy used in the United States comes from fossil fuel. 81%, despite all the spending, despite all the government subsidies, all the solar companies that went bankrupt, 81% comes from fossil fuel. 38% oil, 33% gas, 10% coal, 8% nuclear, 2% hydro, and only 9% renewable. Now let's look at China, because China becomes here very interesting. 55% of the energy consumed in China comes from coal.
Mm.
So even if the Western governments, if they believe climate change is an international phenomenon, if they believe that China has to reduce coal, okay, cut it by half. You still have about 30%. And China is the largest spender on renewable energy in the world, and only 8% of total energy consumed in China comes from renewables. Now look at India. 55% of energy in India comes from coal, 6% from renewables. Now, if you move to the power sector, and I will end in 2 minutes, and the power sector for the world, and this is only the power sector, the power sector of the world is still dependent on coal today. 35% of it comes from coal, 23% from gas, 9% from nuclear, 15% hydro, and only 14%, despite all this spending, only 14% of the power sector in the world come from renewable. And only 3% comes from oil. Remember, I mentioned earlier, no substitution between oil and renewable, because only 3%, and those 3% basically are well entrenched. You look at Europe, the largest source of energy or power generation in Europe is renewable energy, which is 27%. But you look at coal, it's 17%. Oil, 1%. You look at US, and this is very interesting because 40% of US electricity comes from gas, 20% from coal, 18% from nuclear, 6% from hydro, and 16% renewable, and 0.5%, which means that less than 1% comes from oil. So whatever they do with renewable has no impact on oil. China, and this is where the shocking numbers are. 61% of the power generated in China comes from coal. 61%. Only 15% comes from renewable, despite the fact they are #1 spender in the world. India, listen to this. 74% of power generation in India comes from coal. 74%. And both India and China, no oil. No oil used in power generation. So the idea is you look at those numbers, and those are the recent numbers. This is just last year.
Wow.
So show me where is the change that you guys are talking about? Where is the killing of coal and oil? Where is the end? Where is the peak that you asked about earlier when you asked about peak oil demand? Where is it? Look at the numbers. The numbers basically show that the demand for oil is going to stay there, and people are confusing the impact of electric vehicles on oil demand. And I will end with this because I think those numbers are important for the audience to know. Based on our modeling, by 2050, we need more than 700 electric vehicles. And here we are talking about real vehicles. I'm not talking about electric bikes. I'm talking about real vehicles. We need more than 700 million vehicles to keep oil demand at the level it was at last year, which means that 100 million barrels a day by 2050. How many electric vehicles I have today on the road? Only 30 million. So I need to go from 30 million to 700 or more in a period of about 25 years. And when we talk about 700 million, we got to remember one thing that analysts miss all the time. Those cars, the electric cars on the road today, they need replacement after 10 years or 15 years. So I need more than 700 million. To those 30 million need to be replaced too. And I need to count for that all the time. And that's only to keep oil demand at 100 million, where OPEC is happy and all the oil companies are happy. Here is the problem. And I will end with that because this is really a shocking fact that I want to mention here. That 100 million that I need by 2050, we don't have it today.
Wow.
Because of the decline rates, because as I produce from the wells, that oil is depleted. So I need all that oil has to be fresh, which means that I need trillions of dollars of investment to meet the demand by 2050, despite the massive penetration of electric vehicles of 700 million or more. That's why we are bullish on oil.
I think everyone should be. Wow. I mean, this is amazing data that you present to us. And this is so important to know. $4 trillion and has had no impact. This is, wow, amazing. I have to ask you, Dr. Anas, hearing about all this increasing demand and this need for oil and the supply has been the same and not increasing. Is it concern? Do you think we could be headed to an energy crisis?
I think the energy crisis is already engraved in stone and is going to happen no matter what, simply because the policies of the Europeans and the Democrats in the United States have already put us on that track for energy crisis. We don't have enough investment in renewables. We don't have enough investment in oil and gas. We don't have enough investment in the infrastructure itself. Our power grid is still old and need to be renewed. We have a serious problem. People do not understand one important fact, that electric vehicles are very heavy. They are way heavier than their counterparts, which means that I'm just making this up for comparison. If you have a Corolla that runs on gasoline, a Corolla that's electric, the electric is way heavier than the Corolla that runs on gasoline. And what that means is imagine you have a car garage in New York that can handle, let's say, 1,000 cars, and it's a multi-story building, and it's designed for a certain weight. And all those cars now are 1 ton heavier. You can imagine what the impact is. You can imagine what the impact of that on the roads, on the driveways, on the garages. You can imagine the impact of that on the tear and wear of the tires themselves and the higher consumption. And where tires are made from oil and gas. That's no one is counting that demand either. Okay, so yes, electric vehicles are going to reduce the demand for oil, but literally they are going to eat up into the growth of it rather than the demand itself. But when you look at their manufacturing and their results, they are asphalt. Asphalt comes from oil and gas. I mean, if we are going to have higher wear and tear in the roads, that comes from oil and gas. If you want to use concrete, it uses a lot of energy anyway. So it's not that clear cut to show, oh, it's going to reduce the demand for oil. And especially that the Saudis in particular, they already declared their policy. And they said, I am going to focus now on creating a new demand for oil by converting oil to materials. People did not pay attention to that terminology. People did not pay attention to this technology. This is should be a very scary development for politicians. Why? Because what the Saudis are saying, you know what? You want to drive electric vehicles? Go ahead. You don't want my gasoline, you don't want my oil? Go ahead, drive your electric vehicle. I want to make sure that the body of the car is made from oil and gas. I want to make sure the seats and everything else in the car is made from my oil and gas. So go ahead. Why they need it? Because the car is so heavy because of the battery. So they need a lighter body. And the only way they can end up with a lighter body if you use some sort of resins and petrochemicals that come from oil and gas. No more metals. The Saudis basically are, by saying oil to material, saying, you know what? You want to go for solar, you want to go for wind, I want to make sure they are manufactured from my oil and gas. And what is the problem with that? They will make a lot of money out of this. By the time we experience the shortages for crude, and we need to buy their crude, that crude does not exist. And the only way we can get it is to pay more than what those factories are making in profit to compensate them for that. So you want to talk about energy crisis and higher prices? Here is a scenario.
Wow. I have to tell you, Dr. Anas, you really expose the truth, and we're so grateful to you. I mean, people just aren't paying attention, and they're just underestimating this massive demand that's increasing, and it's been increasing. Thank you so much for everything, Dr. Anas, for taking the time to speak with us. You are a valuable, trusted source in energy and oil markets, and I look forward to meeting with you again and checking up with your updated outlook or forecast, maybe later this year, early next. Please tell our audience how they can follow you and read your amazing, I mean, your reports seem to predict the future. So please tell us how they can find these amazing reports.
Thank you. The easiest way is to find me on Twitter is my first name and last name, ANAS ALHAJJI, Anas Alhajji, at Anas Alhajji on Twitter. I post all the links to our reports, etc. The reports, basically, we have 2 reports on Substack. The daily energy report that we publish on working days on daily basis, like the one we published today. And then we have the weekly. It's really not one weekly. We publish about 3-4 weeklies, including the rig report, the inventory report. And then we focus on global LNG, the situation in Europe, Russia, China, Saudi Arabia, Nigeria, Kenya, Brazil. I mean, you just name it. We cover everything related to the oil industry.
Yes.
And we cover OPEC and OPEC Plus extensively. So anything related to the energy markets basically is there. And even if people cannot afford to subscribe, we put a lot of free materials out there so they can benefit from that. And for students in particular, if any students are listening here, and you need certain things. We are really dedicated to education, so I'll be happy to give free reports. What they just named the report, and I'll be happy to give it to the students free, whether university or high school.
That's so nice of you. Thank you so much for sharing this very enlightening, brilliant information. Dr. Anas Alhajji, thank you to the listeners.